Oh, if I could, just one last thing for Andy, who just asked that question, is I guess part of the reason that I don't do it is, you know why? I don't want to be too reliant on anything. You get what I'm saying? I want to keep my brain always thinking about the absolute numbers here and what is reality. So forgetting about the slope of the MA or whatever, I want to know that the hardcore reality here is that the market's moved up, and yet in the same 1 hour period, my tick, the ticks went like this: plus 1,000 high, plus 815 high, plus 686 high, plus 641 high. You know, it's like less, 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 less. You know, that's what's important to me. And at the same time, the market's going higher, 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 yet under the hood, less and less traders are participating. They obviously don't care. They're really not involved. And whenever you have any market, any stock or whatever, you know, Rob has told you this, I'm sure you heard this from a million different places, if volume is not participating, if there's no correlation between, you know, institutional volume or people really caring, quote unquote, supporting the move is guaranteed to fail. It has to. It has to, because when do stocks turn? When do futures turn? When does anything turn? Everything turns when the party that's in power runs out of bullets, not because the other side all of a sudden got smart and took over. It's because the people that were moving the market up stopped buying. It's not because a whole bunch of sellers knew that 682 was the top and they were there waiting and they were like, bam, look at us, we're genius. This is the top, we're selling, selling, selling. It's not that at all. The selling just builds upon itself as there's less and less buyers. And these internals here with this tick relationship and the ADVN and the breadth, they clearly show you that there's where there are more or less buyers as the market is moving. They show you this.
We had a question on how you would have predicted that move at the end of Friday. Is the up volume, down volume chart not moved over far enough?
The up volume, down volume chart is moved over just enough right here, right? This is 330. And this is the bar that's from 330 to 345, right? And this is 345 to 4, I believe, right? Usually moves that are very, very late in the day, and I believe this was news-driven, right? Something did come out, right? They generally will not respond well to the internals, or I should say that the internals will not be able to forecast that type of move. They will not. Stuff that is happening that's a knee-jerk reaction to something coming out on TV or whatever is generally not going to be foreshadowed here. These things happen too fast, too violently, and me personally, I mean, I'm generally not day trading past 3:20ish. You know, when I get really close to that last half hour of the day, I am not trading futures anymore at that time. I'm well done for the day. Usually I'm done by noon, to be honest with you. But in general, that's one of the main reasons why I do not look to be doing positions in terms of intraday in that last half hour. And I know that there's a lot of traders out there who would disagree with me because they would say, oh, that's my bread and butter. There's a lot happening there. But remember what I said when I started this conversation. You have to find the strategies and the indicators and the trading style that you are comfortable with. I am not comfortable in that last half hour because I don't feel that I can accurately predict what is going to happen. And you can clearly see that using the tools in my tool bag here, there's absolutely nothing on these charts that would tell you that this was about to happen. Nothing. I'd be the biggest liar in the world if I tried to pull something out of these charts to say, look, you know, we could have known this was going to happen. Absolutely not. There's nothing. I don't see anything there. I mean, look at this AD advance or decline relationship. I mean, it was down at the lows, moving lower, made a bearish candle into this 15-minute period, and then bam. So, you know, news-driven stuff like this really doesn't bother me at all because I just tend to stay away. And, you know, it's going to happen sometimes. Sometimes it's going to happen in the middle of the day when you're caught in the middle of it. But that is the nature of trading. I mean, that's the volatility that we're experiencing now, don't forget, is a double-edged sword. It pays you a lot more, but obviously the percentage moves in the market are bigger, and the market is news-driven. So with every greater increase of reward, there is greater increase of risk because that's the lay of the land. You know, things don't work any other way.
Yes.
Yes, sir.
For people who do not do the day trading, can this be applied to daily charts? And
yes, sort of, I'll say. The best way to do it is to spread the chart over usually an hourly. On a daily, it won't really work because on a daily, it'll just show you the closing value of, for instance, the UVOL-DVOL. But for instance, if you switch it to let's say an hourly, like I'll go to a 5-day, Let's go to a 1 hour. See the breadth here? This can help you if you match this up with an S&P chart underneath it, and then you see that, okay, well, like for instance here, the market went really low, and then here, for instance, on Friday, maybe we made a lower low, but the relationship with the breadth was not as bearish. This can help you, and it can, a decent amount. However, I must be honest with you, I don't put that much stock in it, because the problem with this is that it's never going to be able to take into consideration opening gaps. That's the thing. Whereas right here, if I look at just this relationship between Thursday and Friday, it would tell me that Monday should be an up day. Because why did the market go lower on Friday, and yet it wasn't so bad breadth-wise, right? It just wasn't as negative, right? And here you can see that on Friday's advanced decline line, and it was just pegged at minus 2,700, huge. And here it wasn't so bad. We only got down to minus 2,000. But part of the reason we only got down to minus 2 is that we started from a high of 1798. So this is actually quite bearish on Friday, where we went from 1,700 high down to minus 2. That's 3,700 ticks on the AD line. That's really bearish, But again, see how it tends to fake you out? Like, what should I do? Should I say, okay, this is a bullish signal because it's up, because all the ticks, all the AD action is higher than Thursday, even though the market went lower, right? Or at the same time, do I say, well, is it a bearish signal because at the same time as it is this relationship, it moved from plus 3,700 to minus 2,000? Do you see what I'm saying? There becomes so many variables come into play with news and gaps, and the fact that the futures trade 24 hours and, not so much on the weekends, but starting from, 6:30 p.m. or whatever it is on Sunday when they start. In an environment like this in VIX 50, excuse me, where you just have so many factors in terms of volatility that are gapping the markets up and down and moving the markets in big pieces, I would say that, yes, it makes sense to pay a little bit of attention to these relationships on daily charts, but it's just not going to be as effective. I got to be honest with you. I have tried this, but I really don't try to base trades off of this in terms of swing trading or longer-term trades. What I try to do is use these tools in order to get more advantageous entry and exit points on longer-term trades. Somebody's asking here in the chat, it says, is it best to have all the charts set at the same time frame or the internals at a shorter time frame? I would say you have to have them all set at the same time frame, just the way that you're seeing it here. You want to keep them all the same. You'll get very confused if one of these was 5-minute and one was 15-minute. Then they really wouldn't match up. So I'd say definitely same time frame.
Okay, looks like we're good, Peter.
Okay, good. So basically, I want to thank everybody for their time. Thanks for letting me participate. Definitely thank you to Robert for inviting me here, and thanks to Matt for running it. And, if you're interested in any of my stuff, it's all at shadowtrader.net. And that's pretty much it. So thank you very much to all the people in Michigan and everybody online as well.
Thank you very much, Peter.
Thanks, Peter.
Okay.